Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing First Solar stock so we can determine if it's a buy or a sell. First Solar is a manufacturer of solar panels and a provider of utility scale PV power plants. The company is headquartered in Tempe, Arizona and was founded in 1999. Let's get started with the model. This is a large cap company, 19 billion market cap. They're trading at 177 a share and they have 107 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They do have negative free cash flow each year, which isn't a great sign. But their revenue is projected to grow a lot in the next few years, so they should have positive free cash flow this year and the next few years. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's negative in 2019 and 2022, positive in 2020 and 2021. Revenue is the sales for the company, and that doesn't look so great. It's pretty much going down from 3.1 billion to 2.6 billion. Just last week, they released their first quarter earnings, and they had sales of 548 million. That is down a lot from the last quarter, over 1 billion, but up a lot from the first quarter of 2022. But a really positive sign is their gross profit is higher in the first quarter compared to the fourth quarter, with a lot lower revenue. So they're doing a great job at managing expenses. They're much more efficient. Their operating expenses are also down from 107 million to 94 million. So they do have positive net income in the first quarter of 43 million, which is a big improvement from the prior few quarters, which was negative net income. Let's look at the capital structure. 5.8 billion of equity, 200 million of debt. They're 97% equity, 3% debt. And they could pay off all the debt with the cash in their balance sheet and still have 2.4 billion of cash left over. I gave them a WACC of 10%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 13 billion. We discounted those numbers back to today's and the weighted average cost of capital. We get a value of the company of $11 billion. We divide that by 107 million shares. And we get a calculated stock price of 101. They're trading at 177, so they're trading at a 76% premium. It's a sell according to the model. Simply Wall Street values them at 321. They say they're 44% undervalued. 20 analysts price this stock and the average price target is 222. The low is 170, the high is 272. 25 analysts price this stock and the average price target is 219. They say it's 23% undervalued. This is where the stock has been trading since they IPO'd in 2007. They got off to a really good start, growing about 10x the first year and a half. They broke through $300 a share, never hit that point again. In the beginning of 2012, the stock hit its lowest point ever, below its IPO price. It did break through $50 in 2013, 2014. Then it pretty much traded sideways for about 8 years. But in the past 10, 11 months, the stock has done really well, up over 200%. There are 20 companies in the same industry as First Solar, and if First Solar has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. They do spend a lot on CapEx, over $1.1 billion. They have hardly any debt on their balance sheet, a really low debt to equity ratio, a lot better than average. Nobody pays a dividend in this industry. Most companies in this industry do generate negative free cash flow, including them. They rank second in market cap, but all their ratios are worse than the median. They do generate lots of revenue, but relative to their market cap, they don't generate that much revenue. And their 5-year annual revenue growth rate is only 1%. So to summarize, I have them trading at a 76% premium. I rank their free cash flows 2 out of 10, their revenue 4 out of 10, and their ratios 2 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.